Good morning, and thanks so much for tuning in. This is Stocks to Watch on BloombergQuint. It's going to be an interesting day of trade, and the big boy Reliance will be in focus once again because we've seen just a short while back that General Atlantic will be investing 3,675 crore rupees in Reliance Retail Ventures. But there are a few other stocks that could very well be in focus as well on account of news flow. We're going to talk about those in today's session. My guest today is Rusmik Oza, Senior Vice President and Head of Fundamental Research at Kotak Securities. Good morning, Rusmik. And, first of all, a very quick word on Reliance Industries and the latest deal. It seems to be at that same valuation. So while this is positive, perhaps it's not going to move the needle to that extent. And then let's launch into the first stock, which is Welspun Corporation. This is the stock that is going to be in focus in all probability because of the order wins, and it's a straightforward notification. The company has won multiple orders worth 147 kmt, and that's worth close to 1,400 crore. That takes its total order book to approximately 6,300 crore. So, what's your rating on the company, and how big or how positive is this order win for them?
Hi, good morning, Alex. A quick update on Reliance. What you asked is, I think most of the deals have been happening at that 4,25,000 crore enterprise value range, which is good. I think because most of the analysts, including us, pure hardcore retail, we are valued at around 3,23,000 crore. So there is a premium attached to the valuation at which the pre-IPO or pre-market deals are happening in Reliance Retail. So it's good. There's a stage that is being set for in terms of the valuation of the retail business. It's a good development for Reliance, and it also helps them to improve the cash flows and improve the margins also going forward because of the cash flows that come into the company. So that's on Reliance. On Welspun Corp, we do have the stock under coverage. Our target price was 110 because earlier we didn't have the visibility on orders. That's why our targets was a little.
Rusmik, are you still with me? Rusmik, are you still with me? Let's pull up the price chart and see what Rusmik, if you can hear me. I believe we've got a frozen frame there. In the meanwhile, let's pull up the Welspun Corporation chart and see what Rusmik was pointing out. He said essentially that he's got 110 price target, which is very close to where the price is at currently. But he also mentioned that Rusmik, hold on. I think we lost you in the middle. So we lost what you were saying, but we did catch that you had that you have a 110 rupee price target for the stock, and that you didn't have visibility on orders, and that was something that was holding it back. So perhaps you can pick up from there.
Yeah. So at the start of this fiscal year, the order book of Welspun was only 7.5 lakh tons. Now with this additional 7.5 lakh tons, it gives visibility for at least next 12 months plus. Earlier, the visibility was only for 2 to 3 quarters because last year they did sales of almost 15 lakh tons, and to match that revenue, they needed sales of 15 lakh tons plus this year. Now what is happening is because the crude price at and now it's stabilizing at $40-45, we are anticipating that some more bids will get converted into orders going forward for the company. And in India also now, the government is little quite active in terms of spending and increasing the entire national gas grid going forward. Also with water cleaning and this Namami Gange project, a lot of orders could come in on the water side. So this order book increases the visibility, and that could actually lead to an increase in our price targets also going forward. 2-3 good points about the company. Last year, they've reduced the debt by almost 253 crore. The debt equity is now gone substantially to 1:1. They had a buyback also last year. They're expecting improvement in EBITDA margins and a lower debt going forward, which could help in re-rating. Stock trades at around 3.5 times on forward EV to EBITDA basis, as compared to historical averages of 5 to 6 times. So there is this re-rating possibility from 3.5 going to around 5 times. So there could be a 20-30% upside coming into the stock going forward, and more orders come into the company going forward.
Fantastic. Okay, so that's a clear view on Welspun Corporation. The second group of stocks perhaps is not as clear to look at, Rasmik, and this is on the back of a Bloomberg story, which is source-based. It talks about the fact that Anil Agarwal is putting money together for a fund that is focused on India, and he's targeting a fund with a corpus of $5 billion, initial amount to be around $1 billion, and he's already scouting targets, that is, companies that the government is looking to sell. What, according to you, are those prime PSU stocks that could be targets for acquisition, and what should the investors, by and large, retail investors, pay attention to?
So normally the core hardcore domain of Vedanta has been metals and oil and gas as of now. In that space, I think so. The government has shown its intent that they want to keep only 1 to 4 PSUs in the strategic sectors. I think they have identified some 18 strategic sectors where they'll have only 1 to 8 companies. So going forward, I think so. The names which are already in the pipeline for strategic divestments are BPCL, Concor, Shipping Corporation of India, and maybe then you have another set of companies like BEML and most of the companies. To a large extent, most of these companies could be related to infrastructure sector only. You'll have power, petroleum, oil and gas, mining, metals. I think these will be the spaces where a lot of divestments could happen going forward. Maybe you'll not have much of that happening in the defense space because it is a core strategic segment for the company. But going forward, I think so. Yeah, the kickoff, the divestment could start off with BPCL. Then maybe we can look at Encore Shipping Corporation. I think a lot of companies are interested in BPCL because of its asset, the kind of assets they own. There's a lot of deep value in the company in terms of the network of petroleum outlets they've got, plus refining petrochemical capacity. So maybe this could be in tune with participating and trying to get a share in some of the good PSUs that come up for divestment. So we'll see host of these kind of activity maybe starting maybe in the next few months in this fiscal year, and then going forward escalating and going into much more faster divestment process in the next fiscal year.
Okay, of course, there's LIC also to look forward to, but let's talk about the last one, that is NHPC. And the company has apparently signed an MOU with the Power Ministry, and I think this is a regular update for the generation target for FY21, which has been set at 27,500 mega units, and that compares with last year's target of 26,000. The revenue target is set at 8,900 crore, and the operating profit as a percentage of revenue target is set as 38%. Does anything stand out to you on the negative side or on the positive side, Rasmik?
Yeah, so in case of NHPC, I think in fact our target is of revenue this year is higher than what they've talked about. So we are building in around 9,500 crore plus revenue this year. For power companies, especially the hydro power companies, the regulated equity matters a lot because return on equity is based on the regulated equity. In case of NHPC, I think going forward, what we can see is they are going to commission one hydro project next year, FY22, which can lead to a 20% jump in the regulated equity in FY22. And there's one more project which will get commissioned in FY24. So what will happen between FY20 and FY24? Most probably the regulated equity will go up from almost 13,000 crore to 22,000 crore. So that's the visibility in NHPC, which could lead to maybe a single-digit revenue growth and a single-digit earnings growth. So it is not a company which is going to report fabulous earnings growth. It's a very slow and steady, consistent performer in terms of both revenue and earnings growth. The book value is 36, the price is 20. So you're getting the stock at very cheap, 0.55 times price to book value. Earnings per share should be 3 rupees this year. So you're getting at maybe 7-8 times P multiple. The most attractive thing in NHPC is what investors normally look for is dividend yield. They pay 1 rupee 50% dividend, so your dividend yield goes up to almost 8%. And our price target on the stock is 26 rupees based on the SOTP valuation which we do for the company. So there is definitely around 30% upside in the stock price with a healthy dividend yield of 8%. But maybe if someone is looking for exponential earnings growth, maybe this company may not be fitting into that category. It's a slow and steady single-digit earnings growth with a very high dividend yield. But yes,
Right.
in terms of visibility, you've got strong visibility.
Fair enough. Thanks so much, Rusmik, for that update. A very quick point, you should watch out for Sumitomo Chemicals. As Neeraj pointed out today, the company has an OFS, the promoter rather has an OFS that's been priced at a discount of 9% to the share price that closed yesterday. Thanks so much, Rusmik, for joining me and for sharing your views today. And to you, dear viewers, thank you so much for tuning in as well. And I hope this conversation helped you out. Do stay tuned. We've got a lot more coming up on BloombergQuint.